My name is Sheldon Zizek from Chicago, Illinois. I have two questions. The first one is concerning Mr. Munger. We know what Mr. Buffett's retirement plans are. I was wondering what your plans for the future concerning Berkshire are.
I've always preferred the system of retirement where you can't quite tell from observing from the outside whether the man is working or retired.
He does it well, too.
You know, a problem in many businesses, particularly the more bureaucratic ones, is that your employees retire, but they don't tell you. And
I think I can speak for Charlie on this. Charlie and I are not in any hurry to retire. He's trying to outlast me, actually.
Thank you. My second question is, I was just curious why you sold a portion of Cap Cities.
We thought that it was a good idea for Cap Cities to have a tender offer. They had cash that we thought that they could not use in any, they were not likely to be able to use in a better way than repurchasing their own shares, because they do have some very good businesses. They and we felt that a tender offer would not be successful in terms of attracting a number of shares unless Berkshire were tendering. We felt the price was reasonable to tender at. It turned out that the business was getting stronger during that period and various things were happening in media. So there were only 100,000 shares or so tendered outside of our million. That isn't necessarily what we thought was going to happen going in, but that is what happened. It's acceptable to us, but that doesn't mean that it was the desired outcome. We would not have tendered all of our shares or anything of the sort. We wanted to remain a substantial shareholder of Cap Cities. Most of the time we've favored Cap Cities buying in its stock, and it's bought in a fair amount of stock since the ABC merger took place started in 1986. Zone 5.
Good morning. My name is Matt Vogt. I'm from Omaha. Last year's meeting, you made reference to structured settlements. I was wondering, how is that business progressing for you?
The question's about the structured settlement business, which is a business in which Berkshire guarantees, in effect, an annuity to some claimant of another, usually of another insurance company, who has suffered an injury and instead of getting a lump sum now wants to get a stream of payments over many years in the future, sometimes going out 75 years. We have set up a life company to do that business. We formerly did it all through our property casualty companies. And we have done some business, but it's not been a big business yet. And it may never be a big business. It's a perfectly satisfactory business, but it's not an important item at present in the analysis of Berkshire's value. Are you having a problem with sound out there on this or not? Just no? Zone 6.
My name is David Samra. I'm from San Francisco, California. In your annual report, I noticed you mentioned Wrigley as being a company that has worldwide dominance, somewhat like Coca-Cola and Gillette, and was curious to know if you had looked at the company in any detail, and if so, whether or not, if you decided not to invest, what were the reasons why?
Well, we wouldn't want to comment on a company like that, because we might or might not be buying it, we might or might not be selling it, and we might or might not buy or sell it in the future. And since it falls under that narrow definition of things that we don't talk about, it's a good illustration of a company that has a high market share worldwide. But you can understand the Wrigley company just as well as I can. I have no insights into the Wrigley company that you wouldn't have, and I wouldn't want to go beyond that in giving you our evaluation of the company. Hate to disappoint you on those, but on specific securities, we are not too forthcoming sometimes. Charlie?
I'm good at not being forthcoming.
Zone 7?
Mr. Buffett, Kathleen Ambrose from Omaha. I have a question regarding global diversification, just in general. What do you look for in a company? And if so, as far as Europe or Latin America, if you'd like to be specific.
Yeah. The question is about global diversification. All we want to be in is businesses that we understand, run by people that we like, and priced attractively compared to the future prospects. So there is no specific desire to either be in the rest Europe or the rest of the world or Far East, or to avoid it. It's simply a factor that it's not a big factor. There may be more chances for growth in some countries. 80% of Coca-Cola's earnings, roughly, will come from outside the United States. 80% of Guinness's earnings will come from outside the United States, but they're domiciled outside the United States, whereas Coca-Cola is domiciled here. Certainly, in many cases, there are markets outside the United States that have way better prospects for growth than the U.S. market would have, but they probably have some other risks to them that this market may not have. But we like the international prospects, obviously, of a company like Coke. We like the international prospects of a company like Gillette. Gillette earns 70% of its money outside this country. So if you look on a look-through basis, Coke, we might this year get something like $150 million of earnings indirectly for Berkshire's interest from the rest of the world just through Coca-Cola alone. But we don't make any specific, we don't think in terms of, I like this region so I want to be there or something of the sort. It's something that's specific to the companies we were looking at, and then we'll try to evaluate that. Coke is expanding in China. Well, I think, I forget what they showed last year, maybe 38% growth or something like that in cases. It's nice to have markets like that are relatively untapped. Actually, Gillette is expanding in China in a big way, and the Chinese don't shave as often, and more of them are what they call dry shavers than wet shavers there, which is electric shavers. But maybe we could stick something into Coke that would come. Maybe a little synergy at Berkshire finally. Who knows? Zone 1.
Good morning. I'm Marshall Patton from Bandera, Texas. And back to the insurance losses, what is the comparison between natural disasters and such as the earthquake and so on, and the LA riots?
Well, I'm not sure what the connection. They obviously can both lead to super cats that we insure against, because if there is enough insured damage, it's likely to trigger payment under some of our policies. It would take some really big riot damage to get to our levels, because normally we don't kick in now until an event gets up to at least $5 billion or so of insured damage under a very large majority of our policies. Something like a quake causes a fair amount of damage that is not insured, because to the extent that it's highways and things of that sort, public buildings, a lot of that is not insured. But you get interesting questions on this. Usually we insure an event. But what's an event? If you go back to the riots that occurred after Martin Luther King was shot, you had riots in dozens of cities. Is that one event, or is that a multiple number of events? I mean, they're started by different people, and but maybe arising from a common cause. Some of those things aren't actually very well defined, even after hundreds of years of insurance law and custom, the experience of that. But I would say that rioting is very unlikely to get to a level that triggers our policy. The big risks we face are quake and hurricanes are more significant risks than quake. They call them typhoons in the Pacific Ocean, but floods, tremendous damage from floods last year, but basically there's not a lot of private flood insurance bought, so the insured losses do not get large. Just watch the Weather Channel.